Hey YouTube, what's going on? Today's Sunday, same gig, I'm going to the watch list. Gonna be analyzing some stocks. I struggled last week again to be profitable. I'm consistently struggling, but I'm still motivated. Every week when I fail, I study even harder, as in I study the specifics as to why I'm failing. Uh, I just want to clarify before I even go into my watch list some of the things I'm doing to get better. One of which is really just looking at OBS. So I record through OBS, stream my OBS, and I do stream sessions. So really looking at those stream sessions and asking myself, what are some ways I'm behaving that are counteractive to my success and they're holding me back as a successful stock trader. One of the things, so I noticed a handful of things on some of the plays that I identified potential in, but I missed. HEAI being the most recent ticker that I missed. So a lot of the setups that quote unquote interest me, and I say this chart's interesting, are actually the ones that will really run. And that's because they're usually threatening some sort of bullish break, as in they're threatening their long-term highs, or there's higher volume, and it makes me uncomfortable to go long. And that really shouldn't make me uncomfortable. In fact, those are the signs like unusual volume, whole dollar, half dollars, that should be that should encourage me to trade and to go long. Not the signs that hold me back and make me feel worried. So part of me and my development as a trader is focused, at least what I'm telling myself how I can improve is like, okay, when you spot these setups with unusual volume, like at some point the thinking has to subside, or you just have to stop thinking and avoid analysis paralysis and just go for the ride. And I'm really technical and I can think through things before I trade, but I can't think through the trade when I'm in it. And that's why with NBEV, even though that ran all day, I took profits at 10 cents because I had an itchy profit finger. And why? Because I was anxious. And why? Because I didn't really trust myself and I'm not confident. And I understand that a part of that comes with time in the market. But it's really essential to just be confident in your investment decisions and take pride in them. And even under the course of when you're experiencing, volatility and uncertainty in the market, you really have to have faith in your system and the setups that you believe will work a majority of the time. So with that being said, I created a notes list on weaknesses that I've been experiencing, just my personal weaknesses that I've been experiencing over the course of these past 2 to 3 weeks streaming, as I've gone back and watched some of my streams and realized what I'm doing wrong. So one of the points was, and I'm just going to go over these points and then I'll get into the watch list. So one of the points was I was scared that the stock is going to come down off of intraday highs. So when a stock's up a lot intraday, yeah, I mean, it can come down, it can get pullbacks, but you have to judge the volume on it and see if it still has potential to keep going. And usually, like in the case of CTRM here, it's up quite a bit, around $6, around 560. And that, to some people, may say, oh, well, I'm going to wait for a pullback. And you'll commonly hear me say that, oh, I'm going to wait for a pullback. Well, when you gauge how there was relatively no activity over Tuesday, Wednesday, Thursday, Monday as well, and then you consider the fact that it has a large not a power move, but a significant move, starting at $5. I mean, it's pretty much a $5 breakout. It opens at $5, and there's that volume, and it suddenly goes up a little bit. That's going to catch a lot of these people off guard. And from previous consolidation, relatively no activity, when that surprise sort of buying power comes in, that's when people really attack, because there's no clear resistance it's caught people off guard, it can keep running. And in this case, there was unusual volume on a Friday morning. It's, I mean, unusual as in significantly higher. I don't even believe there was news, but it was a technical breakout on a multi-day momentum stock. And Tim Bowen, I watched, he's a Stocks to Trade pro, which I want to recommend to anyone who has the money for it, because Stocks to Trade has been, I've used Stocks to Trade, the Stocks to Trade platform a little bit, but I haven't used the pro platform. But you do twice daily webinars, Monday through Friday, I believe, sometimes 3-4 times. Bowen's a really great mentor. I watch a lot of his podcasts on YouTube from Stocks to Trade, and those are free, by the way, if you want to get the weekly watch list from Stocks to Trade, or watch their weekly watch list overviews on YouTube. Just look up Stocks to Trade on YouTube, and Bowen's a really nice guy, really insightful with the market, somebody I look up to, and a good mentor. So yeah, I recommend him. But with Stocks to Trade, I was watching one of the webinars, which is actually free. It's spotting key levels of support and resistance on multi-day momentum stocks. So I recommend that webinar. You can look it up. Look it up on Instagram. Look up Stocks to Trade on Instagram, and then there's a link to under the profile under one of his posts to the webinar. So this is a case here where CTRM, it had a pretty good amount of volume initially pre-market, and it broke that resistance, and over relatively no volume and activity was pretty much illiquid for the past 3 days. So when it has that relatively high increase initially, that's going to scare people, and then more longs are going to come in. And you even see here that it bounced at $6. So $6 just so happened to be, if you look at the 20-day chart, so it came down and bounced around the $6 region, which was a level of resistance from Wednesday, when it had sort of a little bit of a run up before it faded off on the day. And that day happened to have a little bit of a higher volume. So, this higher volume resistance days from past, you don't want to try to guess which resistance level it's going to react to. You just want to see what resistance level is it reacting to on the chart, and then you need to react accordingly. So that was also one of my struggles too. Moving on to that is that you don't want to guess what levels the stock is going to react at. You want to think through where is it reacting at, why, because for example, if this pulls back, you could easily try to predict that it's going to top out around or bottom out after the pullback around 655. And actually later on in the day, it did have a little bit of a bounce around 655. But that initial pullback, it didn't bounce until around 593, which just so happened to be this resistance level, which was slightly lower than the past. So, it's not a science. You can't say, oh, it's going to pull back and bounce at the resistance level with the highest volume in the past, because it didn't bounce at 665 initially. It actually bounced after the initial run up, as you'll see here. It bounced, it's around 620. So it's tough to try to predict a level at which it's going to bounce at. So it's more important that you look for key reasoning. Or it didn't bounce exactly at 620. It showed its first green candlestick around 620, but it actually bounced around 590-ish. And this was its, as I stated earlier, its resistance from Wednesday. So, don't try to predict the resistance levels, the support, the where it's going to bounce at from the past. Just use past charts as a guideline and say, and think to yourself, okay, this is where the stock is reacting at. So this is where I might want to buy and risk off of, So that's enough for that point. But another one too was not considering the amount of volume, relative volume, the stock is receiving when trying to determine how long I should hold my position. Now, in this scenario with CTRM, volume was significantly higher on the day. It had around 100,000 plus 200,000. Let's see, on the day, I mean, I would guess over close to 1 million shares traded. Regardless, though, you can see that there was at least 400 to 500,000 more shares traded on Friday than the past days. And that was just because, so that is sort of the reasoning why you should stay in the trade, because if it's maintaining that higher volume, then you know that it can keep running because there's more people buying. And even on these dips, if there's high dip buying volume, you know, you really need to be patient and let this play out over the course of 30 minutes to an hour to a couple hours to maybe 3 hours, to let the stock really run its course and the move to catch potential. If you were to try to scalp this, you know, over the course of 5 minutes, yeah, I might be successful since there was this big green power move that went up 20 to 30%. But I will say this, that most often or not, you're going to have to wait a little bit for some of these plays to really, the price action to really develop. And you might have to wait overnight. You take an overnight trade. And my weakness is that I'm sort of viewing these setups as like, okay, scalp, let me get in, get out, intraday support and resistance, which is a very beginner type of mentality. It's actually one I've been trying to get rid of because it does not lead to consistent profitability. If you're constantly dialed in on the intraday chart in every little candlestick, that's not how you become consistently profitable. It's about working smarter, not harder. So I'm not even on my preaching chair. I'm actually, what I'm saying right now is actually a lot intended towards myself too, but I know there's probably a lot of other people in a similar situation, so I want to help them too. But yeah, this is one of the hardest learning curves for me. Is like, the hardest things to learn was like, don't focus so much on the intraday chart, because the intraday chart is usually playing out as a result of the longer term chart. So focus more on the longer term chart, and then the intraday chart price pattern should be used to complement that. So I'm sort of afraid of double, triple tops intraday, but you know, even double tops, triple tops forming around $6 or $6.25 or $6.50, and that's just not the reality of how prices move. I mean, that is a known pattern, but the reality of it is that it's reacting more to the longer term levels, because that's where a majority of the buyers and sellers are at. So yeah, that was another thing. And then also another weakness was not considering how quickly the stock moved when threatening long-term resistance levels. So in this case, CTRM on Friday moved up to $7. Okay, so it threatened, as you'll see down here with my cursor and my trend lines, around $7. You'll see that on the bottom chart here, you'll see that there are top wicks on Tuesday morning right around that range, and this just so happened to be where the stock, I'm sort of losing my thought here. I'm sorry, I'm just trying to articulate a little bit of a difficult idea, but back to my point is, like, you see these power moves around these sort of longer term resistance levels, like intraday. So if you look at Friday, and by power moves, I don't even necessarily mean power moves, but strong moves that can create power moves. And you see this strong move initially in the morning on CTRM, where it breaks 550 and gets up to the $6 region, right? So what's the significance of that? Well, that initial sort of quote unquote strong move, sorry, I'm getting carried away, threatened sort of the $6 resistance, which was from Wednesday. So it threatened that level, and then it went up even more after, and then it bounced at that level. So that's what I really mean by, like, looking for these strong moves, these larger green candlesticks that threaten some sort of resistance level, and then it comes back down and it bounces at that resistance level. which creates then the bigger sort of power move, which in this case with CTRM was around 20 to 30, 35% in total, that range, if you time that perfectly. But yeah, that's my point, is the initial move threatened that longer term resistance, and then because of that, it bounced at that resistance, and then that's what created the second leg up, and that's when the huge volume came in. So these initial strong moves catch people by surprise, that's why, and they break the resistance levels, so traders feel more comfortable going in on it and buying because there's no known resistance level, which creates the positive momentum for it. So that's really something to be on the lookout for. And then another weakness that so back to that point, I'm just gonna, my last point on that my last statement on this point with the power moves threatening resistance, the strong moves threatening resistance, which create the power moves. You need to, at least I need to, not try to time these dip buys perfectly, because so like you could have tried to get a fill, for example, CTRM around, and I'm just using CTRM as an example because I thought it was a good example from Friday, a good play from Friday, 590, and it bounced around, so around 590 it bounced, and I was sort of trying to time this, like, okay, when should I go in on this? And you could try to get a perfect fill here around the 580s, high 580s, 590s, but chances are it's going to be really difficult to get a fill there, because even though it goes down that low, usually when the stock is pulling back and bouncing at a previous resistance level, it's going to get some buying pressure really quickly once it gets to that resistance level. So you need to, if you want to fill, you need to be willing to accept a slightly worse fill, maybe up in even the 610, 620s, and we're talking about a slightly worse fill as in 5 to 10 to fill as in 5 to 10 to 15 cents away from where you believe the actual bounce level is. But you have to be willing to take that and still be patient, because again, overall, the thesis is that the stock is going to create a power, there's going to be a power move created off of that bounce, from, in this case it was around $6 to $8 within an hour. So that just shows the potential of some of these moves. But yeah, that's the overall point, is like, hey, don't try to get a fill. I mean, if you can, great, aim for a lower fill, but these moves happen so quick that sometimes it's tough to get a fill exactly where you want. And that's my point, is be willing to accept a worse fill for the case, if you're more confident in the setup and you feel like it's reacting appropriately and you feel like it still has potential to really run into 7.5, even 8s, as it proved on it proved 2 weeks ago on Tuesday that it could even run close to the 8s, around 767, 770. So it was an initial weekly runner, and it proved that. So if you're betting off of this resistance bounce around 615 from the past, then you should have confidence that it can keep going, and you could take profits around 20 to 15 to 20% because of the past run, and because it's bouncing in a healthy way from that resistance level. So I hope that makes sense. Patience with the setups that I recognize, that's the biggest thing. A lot of these are coming together. I'm starting to understand it a little bit more, but also it's like when you think you missed the original move, which is like, oh dang, I missed this move from 5 to 6, and that was a 15% move inside an hour. No, you didn't miss the original move, because that caught a lot of people off guard. And now at that point, when you see that original move, that's when you got to focus on the longer term chart. That's when you got to look at, okay, there was this initial move, and this could create something. This could create a play. So, not being this sort of self-defeating mentality, like, oh, I missed it. No, they create second legs for better, bigger, and even better plays sometimes. So yeah, never give up. But those are my biggest weaknesses. And I hope that this week I do a better job of working on them, and just performing at a higher level. Ultimately, this is all about performance, not analysis. So I'm gonna hop off my soap opera now and go ahead and get into analyzing some of the stocks for this week. Looking forward to it. Let's get right into it. So I'm gonna go ahead and check out the biggest runners from Friday. So VTL I already looked at. Nope. KTOV, and that was just because it's under $1. KTOV. So KTOV had a beautiful fade for shorts after that run up. Would I play this? Absolutely not. My guess is that it's just going to keep fading. I don't see a clear resistance. There was this initial power move, but I don't see a clear resistance it would actually bounce at. So no. QD. And if you'll excuse me too, I have been getting some hiccups because my acid reflux has been acting up lately. So yeah, my speech may be a little bit choppy, but so QD, it's just pretty sporadic. Its price action is pretty sporadic over the past 3 to 4 months. So for that reason, I'd probably stay away from it, even though the volume is a little bit relatively higher, and you might say, oh yeah, this maybe could really break 570-ish and keep going. It's not like an optimal setup. I'm sure I could find something better than it. So it looks like the scanner just went out too on me, so I have to go ahead and log off. But yeah, QD will be a no-go. And just wait here. So yeah, if you have any questions about my analysis, please just feel free to drop a comment. I've had like, what is it? Probably at least 10 uploads. Still not 1 subscriber, but then again, I'm not really doing this for subscribers. I'm doing this to be more interactive with the community, but I'm doing this. It would be nice to get, maybe a comment once in a while, and then again, what I'm doing is not the most interesting thing in the world, but I understand. So with CTRM, I do think. Let's see. I had a former run to literally the 20s. So that's a bullish sign. The volume went into Friday's close, still pretty high. Even after hours it was trading, had a 7K. Okay. All right. Excuse me, if you'll excuse me, I'm just sort of thinking through this one. I don't know, it's just probably wouldn't want to play this at this point, even though it definitely could keep going from the 6s, maybe even push to the 10s, who knows, or push to the 7s and 8s again. But you would have risk around the $5 region, but I just don't really think this is. So why wouldn't attack it? Okay, number one, because there's a decent amount of selling volume. It came down off of $22, a little bit hard. It's shown a lot of days with inactivity, and in the past when it shows high volume, usually day after it shows minimal buying volume. So it's like you'll have this one day with good buying volume, and then it fades, and then another day, and then it fades. So with CTRM, it's like, do I really want to get in on it when a majority of time it picks up on buying volume, it just sort of sells off again the next day and then fades and then has another spike. I'll be on the lookout for another potential run, but I don't know if it's really going to happen soon, like tomorrow morning. So I'll probably just I mean, as much as I hate to say this, like, it could, let's see, because it sold off here and it held around 557, 560. Yeah, I'll probably just ignore it. So CTRM, VIVE a little too cheap for me, SRCI a little too. I'm marking some of the ones that I'm not really interested in because of their prices. So I'm just gonna go through those really quickly. 83 cents, 42. All right, so now RENN. I know I've already gone through a lot of these, but for some reason my gut is telling me CTRM might be worth watching. I'm just really not sure where I would risk here. I mean, maybe at its support level or its past resistance around 570-ish, but I don't know. Stay away from what you don't understand. RENN, let's see. Former runner, broke multi-day resistance, showing bounce at 173, 175-ish. Probably stay away from it. Why? Because heavy selling volume resistance all the way from the range of around the 150s to the 240s. So TLGT, SESN, TLGT, see this downtrend and immediately I'm not interested in a long. SESN, way too choppy. Yeah, I mean, I just wouldn't. This is the 20-day chart below here. This is the 180-day chart. You can see pretty clearly that it's pretty choppy and there's a lot of sideways action in the $1 range, which is not ideal. Potential PPDF, TLGT. TLGT, I'm sorry, I already went over that. PPDF. PPDF 530s. Nope. I mean, just look at this. It's just not, it's at its resistance level. There's slightly lighter volume. 540 region, mid 540s is commonly act as a resistance. Not interested. PIXY, RUHN. PIXY, no. RUHN, best. I got a little time here, so I'll probably be doing some more extensive research tonight. So yeah, stay keep watching if you're interested. BEST, probably don't need me to tell you that. BEST, pull back to 510. No. No. And why? Okay. Because look at how random this price action has been. Even though it's an ascending uptrend, are you really going to try to predict a higher low? Are you really going to try to predict that it bottoms out around the $5 region, which it did, and then got a good bounce? There's not a lot of range within a day usually. So is there enough risk reward? Probably not. Price, there's a lot of sort of what would I say, price neutralization, where the bullish and, I mean, not really, the bullish factors are a little bit strong. Bullish factors a little bit stronger, you can tell, but in general there's some price neutralizing going on, even as it goes up a little bit. So that doesn't really create many interesting moves. You know, BEST, CVSI, not interested. It's been in a descending downtrend for the past couple of weeks. UIES over the past, I'd say a couple weeks to 3 weeks, maybe even a month. Yeah, around 3 weeks, it's just been in a downtrend. UIES, so this was a pretty clear break above that dollar resistance, and then it bounced there overnight, had a good hold because pre-market had held well, and then it had a pretty decent bounce of around 10%. So that might have been a pretty good play, but even then, at least personally, and then you can also kind of spy a cup and handle for the course of 4 to 5 months if you look at this from a broader perspective. But you see the cup and then you see the handle. But I don't like the choppiness of this. I don't like the randomness, the price action, and the factor conflict and price neutralization over 3 months. And price neutralization is really, I keep saying that's just when the bullish and bearish factors are sort of evening themselves out and there's consistent volume. But the volume isn't tremendously consistent. It's pretty generally consistent over the past 3 months. So yeah, avoid that. But UIES, gonna mark that down. HSDT. So no. And why? Because, okay, look at this huge gap down overnight, which I'm not even sure the reason why. Sure. So on the 11th, it was downgraded. So it was downgraded by an analyst from, outperform to perform, as you can see. And that was the reason why I had such a huge gap down. So I'm not going to try to trade negative news. And even though it is sort of finding support around the 190s, as you can see here, around, or actually 170s, 190s, it might be finding support, but it's really not. It's still sort of in a downtrend over the past 3 days. So it's not anything that interests me. BAS, BKEP. BAS, look at that downtrend. Nope. BKEP, I'm gonna start going a little faster now. BKEP. No. ALQA. No. Well, hold on, let's see here. So it showed a bounce around 294. This is a pretty common resistance level. But I mean, look on the bottom here at this 20-day chart. If you look, it's there's a lot of days where it's just sort of consolidating sideways, and that's really just not going to give me much reason to trade it. It did have a overnight, so after hours it had a strong move, which I really don't see how you would have been able to predict this, because given the randomness of the chart. So with randomness, I avoid it. You know, like, I could really try to think through it, but even then it might do me an injustice, because simpler is always better. NUGO. I mean, look at this downtrend, prior resistance at 170, consistent volume, prices neutralizing, not even neutralizing, the bearish forces are overwhelming it. So no. And when I say bearish forces, I mean sellers, of course. RMED. No, I mean, look, downtrend again. Just no. I mean, I'm not going to go long on a downtrend. It's just not a good play. So that's it for that scanner. I'm going to go through my watch list now. And then I will go through some of my past scans too. CPRX. Okay, so pull up the yearly chart up here, or the 3-year, all time actually. $563 resistance. So even from 2008, this has been at this level around 2008 too. Now it's been okay. So if I attack this anywhere, it would be around $5. That's why my alert is set there, because over the past 3 weeks, it's been consolidating between 5 and 565 to 570, and it could pull back to basically whenever it gets to $5, it usually over the next couple days will have a pretty good increase, as in, you know, maybe 5%. So I would even be reluctant to attack this in the first place, because it's, even though it has that break, I mean, 456, when it got to around 456, that's when it had a pretty good move, because that was its yearly, as you can see here, around December of 2017, yeah, right before 2018, around, or okay, that was 450. If you see my cursor in the top chart here, around 450, right? So when it got to 450, that's when it really had a pretty good rise, and the volume started to pick up, because you have a lot of people looking at the yearly chart, and when they're looking at the yearly chart, it's going to break that range, and it's going to keep going, because people think it's a clear breakout, and it was for a little bit, but then people start to realize the multi-year resistance levels, which is why 550 is now sort of acting as that resistance, because if you'll see around 550 to even the higher $5 region around 570, 580, it was resistance before. So if anything, I may play it off of $5, but even then, that's going to require a lot of patience because it doesn't move a lot in a day now. So, you know, the ideal play, like I said, would have been when it was breaking that yearly level. But if it breaks that multi-year level around 580s, then it's also worth attacking. So either that breakout or even the pullback. But in general, I'm not going to be really that concerned with it. So I'm just going to remove it from my watch list. SMSI. Okay, so SMSI 180-day chart, clear break. I know I've gone over these charts a lot, but I just analyze and analyze and analyze because number one, it's hard to remember every single setup. You know, I'm not a computer. And number two, you know, I just want to refresh my trading memory. It's only going to help performance. 320, higher volume. This is we're working with something here because we look at the 3-year and the maximum chart. So consolidation highs right around 322. And then you can look at how long it's consolidated. So around 320, and you look over multiple years, it's consolidated in that region for quite a while. So that does not give you very high likelihood, you know. Even had runs to the 70s and 60s in the past, and this has been a stock since it's been on the market since 95, late 95. So yeah, I mean, you look here, it's pulling back. It's potentially bouncing around the 320 region as it bounced here around 312, 310. Okay, so it could potentially bounce. This is a higher volume wick. It comes down. It might potentially bounce around 313 as well again, because it's a higher volume wick from Monday, from 2 weeks ago. That Monday, you can see the high volume wick was around 311, 312, and that was where it initially bounced at around 310, 309 from Wednesday of this week. So if it gets down to that level again, and then it starts to show that it's going up, then it might be a play that it'll definitely be a play that I'm interested in. But as you can see, I have my alert set for 313 because I'm not going to play this in the middle of the new channel that it's sort of built over the past week since its yearly breakout. And yearly, I just mean a breakout on the year. So SMSI, I will keep an eye out on. Excuse me. So PGNX was another one I was looking at. I'm not so interested in it now, unless it pulls back to around the $5 region, then I will be. So yeah, it's gonna have to pull back to at least $5 for me to be interested in it. And you could probably see why on the 180-day chart, because you look here, it's been pretty clear resistance around even 490. So even around $5, I might be a little uncomfortable. But if you look up here, yeah, I mean, 490 has been that pretty consistent resistance. It was a past support from November. So if it pulls back, it could get a pretty good bounce there, as it did already. But I'm not going to chase it here. I'm not going to try to play any sort of breakout yet, at least until it gets up into the 570 region. And I don't really think that's going to happen because it got some pretty good selling pressure around 550 already. So I'm waiting for a pullback to 490 and evidence that it's going to have a slight uptrend with the 5-minute/15-minute candlesticks. And then only then would I consider attacking it. So I'm going to... So yeah, I'll probably just remove it from my watch list because a lot of these aren't really in the range that I want them to be in yet. ARQL. ARQL I'm not going to play now because it's formed that double top on the month around 590, which was also a past resistance yearly on over past year and to 2 years. So I'm not going to play it now, but yeah, I mean, I don't really see anything going on with it unless it maybe comes down to the 470s, and in that case, maybe I would consider it. And the only reason why I'm saying that is because if you look over 1, 2, 3, 4 past 4 weeks, it held that level pretty well as a support level, but I'm not really interested in it especially because the volume is just a lot lower now. So ARQL, no. NBEV, ACHV, $340, $350, bounce there. So when it got to just doing some thinking here, because you see this high volume pre-market 2 million, 350 top wick starting to show a bounce there. Selling pressure around 9 million though in that range, so I wouldn't attack it. If anything, I'd wait for a pullback to 280, 290 and be patient with that. OVID, yeah, I mean, sort of a longer term play, and I'm not interested in that. I'm interested in immediate potential, more of an immediate potential. So, OVID I have on my FDA catalyst because they have an upcoming data release, but yeah, I mean, why would I attack it in hopes that it's going to continue sort of a multi-day or / multi-week trend, sending up trend, reversal of that downtrend starting. That's the idea here, is like starting 3 weeks ago, that Wednesday, it sort of started establishing lower highs, or higher lows, I'm sorry. So higher lows from the 170s, and then it even had a quick push up into the 260s. But that's the idea here, is we're playing that trend from 3 weeks ago on that Wednesday, the ascending uptrend. But like I said, it's going to take a longer time to develop because of the upcoming data release. The support levels are more predictable. The channel is more predictable because there's a built up hype for the release. So you could buy lower and in that support level, and even potentially try to get try to sell when it has another potential push around to the 220s or 230s. So I know I'm kind of tripping over my words when I talk too, but I'm like actively thinking through this as I'm talking about it. So yeah, I mean, you could say, oh yeah, this might be a higher low here in the 180s, and risk around the 175ish, 170, and hope for a push up to at least 220, 230, which is totally realistic given the upcoming release and the fact that it's sort of a data release and the fact that it's changing momentum. But that's enough talk about that one because I'm not even gonna play it. So NBRV. NBRV, you can see the double top around 320. Not interested now though, because look, it formed the double top. It's just descending over the past week. It's just been in a downtrend since it formed that double top at 317-ish. So ACHV, am I interested? I mean, ACHV above all these I might be interested in because you could get that bounce around 350 like it kind of showed later in the day. But then again, you have these, you have all this volume traded in that region from early March that it's kind of hard to justify doing a long position around 350 and a bounce at that resistance, even though it has shown that when it sort of levels out around that area, it can go. But I'm not gonna go after it. So yeah, I'm just gonna remove ACHV as well from my watch list. Well, maybe not remove it, but yeah, you know what, I'll probably just keep it on there, because I do like to monitor Kyle Dennis's strategy and how he plays upcoming FDA data releases. So let's see, 850 here, so we still got some time. I'm gonna go through some past scans. So FT 160 was down 20%. It's just been fading. But if you look at the 180 day, yeah, I mean, I wouldn't go after this. And with FTFT, it's just because it's sold off. I mean, I was trying to think, oh, maybe it's found a level support here around the 160s, but it's just been in a downtrend for the past week, so not really. Don't really want to play my chances with that. FRSH Papa Murphy's had a reverse split. So reverse split plays I don't do. I know Roland Wolf has a reverse split play that he does, and his Roland Wolf is a really successful trader. I believe he's a millionaire. I don't know, but he got involved with Tim Sykes, and he released a video on 70% of his trades are longs, and he released a video on some reverse split plays. But usually it's like you wait for the reverse split, you wait for it to go down a little bit, and then you wait for some PR. You watch the stock after the reverse split, you wait for some PRs to come out, and then it's probably going to reverse that downtrend and get a quick 20% move intraday. or 30%, because after that downtrend, it sort of finds itself, not even downtrend, but sell off after the reverse split. They're going to try to pump it up again. So they release a PR, and then hence the predictability of when it starts reversing. And I mean, I'm not even that deep into it, but one of my buddies on Discord was talking to me about it. This is pretty interesting. So Zken, BKEP, we are almost done here looking at past scans. So Zken, 1 hour, 20-day, 1 hour, 180-day. Not interested. BKEP, no. I mean, look at the increase, yeah, but then look, it's at a resistance level. Is the volume higher? No, 120. Why would I buy in the 120 range when it's topped out in that range? Not interested. Going through some other scans as well. YRIV. And man, did YRIV ever get a bounce at that 120 range. Really did. Would I play it now? Definitely not. But were these bounces predictable? Absolutely. So, YRIV, no. AYTU. No. Okay, let's check out ATAI. Man, this thing sold off. Now, would I feel comfortable buying this around 250? No. Sorry, my stomach's growling. I just ate dinner and I'm actually getting some digestive issues. I think I have GERD and my acid reflux. I'll probably have to go into the doctor for that. So, not to be negative, but yeah, just the reality. OASX, not interested anymore. This was one of the plays where I was really, that I was all over. I didn't actually buy, but yeah, so OESX, no for now. NBEV, no, because you might try to say, oh, it's gonna bottom out here at this sort of resistance level or in the 540s over the past 3 months, but there's also another resistance here, 570. It's just been fading and cracking support levels for the past week, so that's why I'm not interested in buying it. So there's really not a lot of good setups headed into tomorrow. But it's not a reason to panic. It's not a reason to worry, because when it's just not there, we're just going to be patient. And it's my stomach again. But we're just going to be patient and wait for the best setups to come. And who knows, when we scan tomorrow morning, there might be some better setups that come. So yeah, I'm looking over at my other screen here, checking the time. We still got a little bit of time to do some additional research, so I am going to minimize this, and let's go ahead and check FDA catalyst. Okay, so SCYX, NBRV, which we had on there, EYEN, OVID. I tend to ignore phase 1 and phase 2, focus on phase 3 or more. PGNX was obviously another one, and that's for prostate cancer, so that's big. So moving into May here. Now we're moving into July. This is where I kind of lose interest because yeah, we're moving into July here, so and then unknown dates, so yeah, I'll probably avoid that. So NBRV, which we were already looking at, comes up. There's really nothing here that this is cool for bipolar depression. $144 stock, that's crazy. Maybe it'll be an interesting treatment for bipolar and depression. It's an FDA approval date. Who knows? That was just me being interested. Nothing to do with stocks really right there, actually trading. But I mean, I'm seeing the same stuff in the price range, like OVID, which none of the setups I like. Yeah, I mean, EYEN, but that's pupil dilation, and that's even a little bit more expensive. And I remember going through that setup and not really liking it. MBRV is something I'll probably, let's see, do I have that? I still have NBRV on my watch list. Looking at it, you know, it's not something I really want to attack yet, because looking at the 20-day, it's just sort of right in that mid range over the past. When you look at the past 3 weeks, it's just in that mid range of that trend. So I would wait for it to come down to, like, as my alerts say, around the 240s to attack it. So yeah. I guess that's it for the FDA catalyst. Moving on over to Fidelity. Check out some hot sectors and some hot industries. Performance, sector performance, and I'm looking at the past month. Consumer discretionary, information technology. I'm just gonna write some of this down, and then we'll go into more details after that. But so consumer discretionary and information technology, and industrials too. So we'll get more specific here. I'm just writing down on my whiteboard. I'm writing down the sectors, and then I'll look more at like the industries, and then we'll look at like stocks in those industries. So consumer discretionary, industrials, and information technology. Looking at the industries, healthcare technology for the past week, auto components, specialty retail. Okay. So now we're looking at industries. So auto components stands out. Healthcare technology. Yeah, that was it, I think. Yeah, so just those two. All right. So yeah, we're looking at I'm not even gonna look at the charts because it just pretty much can sort it all by here. I know in some of my previous videos I looked at the charts, but 9 here. Okay. So we got some information technology stocks from the street. I'm sure a lot of these are just higher priced. Okay. Yeah, healthcare stocks. Okay, I'm not interested in these. Yeah, Bloomberg's not gonna. It's kind of tricky when you're getting into articles here. I guess this is the reason why I had stocks to trade, because with stocks to trade you can organized by sector and industry and see sort of the top performing sectors and largest percentage gains over multiple days. I guess this is just something that I'm going to keep in mind in the future. So I'll pull up I'll show you my whiteboard here. As you can see, the sector, so you have industries, auto components, and healthcare technology. And then you also see for the sectors, consumer discretionary, industrials, information technology. So those are really going to be the specific industries and sectors I'm looking at. Mainly healthcare technology because it's shown such great growth, and information technology. So star those. But there's not really a whole lot going on here. So we will see tomorrow. You know, maybe there'll be some potential pre-market breakouts. Some stocks will come up on the multi-breakout scan. We'll have some nice breakdowns and bounces at support levels or past resistance levels. We'll see what's going on. I'll be trading for only around 3 to 4 hours tomorrow because I have school. But thank you for tuning in. Thanks for watching. Be signing off. I'll be back at it tomorrow morning. So I hope you guys have a great night, and best of luck if you're going to be trading tomorrow. All right, bye.